Hey folks, it's Stephen Foster, and today's show is about these new mortgage rates and what effect they have on your first purchase, your refinancing, your second purchase, or your recreational property. We've seen some changes in the mortgage terms out there. We've got a really great product at 5 years and at 10 years, and so I thought we would visit with Jason Roy today, mortgage specialist, and get his take on that area. So, Jason, take it away. Nice to see you today.
Hey, Stephen, great to see you. So yes, as a lot of people probably heard out in the media out there, there are some historically low 5 and 10 year mortgage rates
Oh
out
yeah.
there right now. Now there's a whole bunch of buzz of the rate is low, what's the terms, how are other lenders competing, what's happening out there. So it's quite a bit of buzz out there. So there is a 5 year at 2.99 fixed rate and a 10 year at 3.89. So historically low rates, great opportunity for people to possibly look at, like I said, refinancing, purchasing, buying investment property, whatever the case is.
So, when we're looking at a 5 year historic low rate, what is that number?
So the 5 year down to 2.99. There are a couple lenders out there. Now, that being said, that 2.99 is a mortgage with some restrictive terms. So limited prepayment
Ha!
privileges, can't get out of the mortgage unless you sell your property. So if in year three you've got an emergency of some sorts and you need to pull out some equity, kids are going to college, whatever the case is, you can't. You're tied in. It's fully closed. You've committed to it. So like I said, you want to check the terms of it and make sure that what you're getting fits what you need.
So, as competitive as they are a little bit of a lost leader because they get your attention, but there are some strings tied to it. Although our kids go to university here in America, Jason, university.
Sorry, not college. Yes,
What about that
definitely.
10 year? Now, I always ignore the 10 years because they always seem so. The points always seem so high, but in this case, we're looking at under 4%.
Normally, you're right. Most people just completely ignore the 10-year product because the difference between that 5 and 10 year rates usually doesn't justify locking in for the longer time period. Now, being under 4%, I don't know, it's definitely worth looking at your strategy. Maybe you could set your budget for 10 years, plan how you're going to pay off the house in the 10 years, know what your payment needs to be, know what, extra payments you may need to make, and really set that firm budget and go forward that way.
So a first time buyer, a 10 year at under 4% would be very attractive. I remember my first mortgage was just around 7%. To lock in at 10 years on your first mortgage where you have a set income and you've got that going on, that number might be really
Right.
attractive to you. Is it do the
Right.
banks lend differently on this product, or is it the same process of
This,
qualifying?
yes, same process. If you qualify same as a 5 year. Just the caution is it worth still paying the difference between the 5 and 10 year? 10 year sounds great, but you need to, am I going to be in the property? Am I going to want to sell it? Can I afford the mortgage? Can I do all that sort of stuff?
Okay.
And decide, is that extra security worth maybe a little bit more restriction than only committing to a 5 year term with the lender?
Okay. Well, that's awesome. Great information. Is there anything else you want to add, Jason?
No, just as always, any mortgage product you're looking at, find out what the terms are, see if those terms fit your needs, and maybe it costs you $5 more a month to have something with more flexible terms, but those terms are what you need. It's well worth paying that $5 a month. Just know what you're getting into before you get into it.
Okay, and so that's probably the benefit again of a mortgage broker versus an employee at a bank is that a mortgage broker like yourself would look at all those different scenarios according to the person's financial scenario and just say this is how flexible you might want to be
Right.
able to have and you might want to move forward this way.
Right.
And then you would look at all the different product out there.
Just explain the pros and cons to both, and then you make an educated decision going forward.
Okay, well that's interesting, Jason. Again, thank you very much for your help today, and I'm sure we'll see you again. And for all those people watching this, hope you've enjoyed this and found this informative. Until next time, I am Stephen Foster, and have a great day.
Thank you. Talk to you later, Stephen.